The street has their take on how investors should deal with dilution. We're going to go over this article here in this video, break down what's going on in our markets today and what you need to know as an AMC stock investor. If you are an AMC stock investor, hit that like button. Tap, tickle, touch, smash it, lick it, throw your phone at the wall or your whole damn computer. Doesn't matter, but make it turn a different color. If you want to see AMC stock go through a MOAS-like event, that is your best way to contribute each and every single day. So, first and foremost, let's get into this article from the street. But before I do that, I just want to say there is a little bit of weakness out there on Wall Street today. IWM is down still almost 1%. AMC stock down about 3%, not quite at a new multi-year low, but pretty close. Your multi-year low at $5.08 per share. AMC stock currently trading at $5.14 per share. So we're definitely in an interesting position. And I just want to establish right off the bat as well, the number one thing that's going to drive AMC higher, if you are betting on the MOAS, we need no dilution. So regardless of what this article says, if we get more dilution, AMC stock will not rise, okay? It's a different story if AMC is being diluted at $5 or $4 per share than $15 or $20 per share. That actually makes a fundamental difference. $4 or $5 per share makes almost no fundamental difference in AMC's debt position and AMC's just business as a whole. So let's get started with this article. It says AMC stock, here's how investors should deal with dilution. AMC stock began 2024 on a sour note as concerns about additional dilution from equity offerings put downward pressure on the theater chain share price. Adam Aron really messed up the last time we just got dilution. The last two times, technically, they did a 22 million conversion. Basically diluted us 3 million shares, paid off 22 million worth of debt. It doesn't make a financial impact to nearly the same degree as we need it to, right? To pay off the debt coming due in 2026. It's like a drop in the bucket. It's minuscule at that. Same thing with the last dilution following AMC's last earnings. It's not enough, okay? And it was particularly bad timing diluting shareholders in November when stocks went on to rally big time, especially small cap stocks following AMC's earnings. Unprecedentedly terrible timing for the last rounds of dilution. So we'll see what happens next. We could get more dilution. We might not. We'll have to just, wait and see what happens. Let me know down below in the comment section. Do you think we're going to get a commitment from Adam Aron to not dilute shareholders, or do you think we're going to get more dilution here in the near term? So let's start with this article. It says AMC stock tumbled 15% in the first week of the year. Much of the decline can be pinned on investor concerns over additional dilution from equity offerings. I think that's the only thing that is really affecting AMC stock right now is the equity offerings, all of this dilution that we are currently being faced with. That's what is really keeping investors away from AMC right now. There's no point in buying the stock if you think more dilution is coming. If you think Adam Aron is not going to dilute shareholders, then now would be a good time to be buying AMC stock at multi-year lows. So you really have to come to your own conclusions on that. I've been very clear. I think Adam Aron will make the right decision. He will give us commitment to not diluting shareholders for a period of time. I don't know how long that will be or when that will happen or what day that will happen, but I think it will happen at some point. Now it says AMC has used share issuances to raise urgently needed capital over the past couple of years. Despite shares experiencing a whopping 1,250% dilution over the past 5 years, AMC's strategic equity offerings in 2023 and improved financial performance offer a picture of what the company's long-term success could look like. It says, why AMC diluted shares? I think we already know, right? AMC diluted shareholders to avoid bankruptcy, to raise capital, to pay off some debt, but it's just not enough, right? AMC's dilution magnitude. Investors should be aware of the extent of AMC share dilution, as dilution directly and negatively impacts AMC share price. When the number of additional shares issued is relatively small compared to the company's total market capitalization, the impact on each existing shareholder is likely to be limited, but AMC share issuances have not been small. As of now, AMC has 247.96 million outstanding shares. However, in August of the previous year, The company underwent a 10-for-1 reverse stock split. In the split, each shareholder received 1 share for every 10 shares they previously held. Ignoring the reverse split, today's outstanding share total would be 2.46 billion. To put this into perspective, from the end of 2021 to the present day, AMC's outstanding share count has surged by approximately 1,250%, or over 13x. This represents a significant dilution occurring within a relatively short time frame. So basically, let's say you just bought like 1 share right back here, like pre like 2020, right? You would have lost, or you would be down in your equity over 1,000%. So what that means is basically, if you had, let's just try to be as simple as possible here. If you put $10 into AMC and your equity value, let alone what the share price has done, right? Just equity in the company, your equity would have went from $10 down to $1. Just based on dilution alone by increasing the amount of shares outstanding. That's not great, and that's why AMC stock has been falling. That's just not great at all. Nobody ever wants to ever invest in a company that is diluting shareholders unless it makes a financial impact. Unfortunately, again, the dilution recently has not made a financial impact that you can quantify that makes any degree of sense. Okay, so it says, was the dilution the optimal choice for AMC? It says, this strategic move has not been without controversy. AMC's loyal shareholders, often referred to as apes, have criticized CEO Adam Aron for the decisions leading to equity dilution. Paradoxically, the very possibility of equity issuance became feasible due to the sustained high share price AMC has maintained over the past 2 years, largely driven by the unwavering support of retail investors. Yeah, and now we are no longer supporting the dilution efforts that AMC is making. Even if AMC diluted all 300 million shares they're able to dilute, AMC stock would still go bankrupt. So, yeah, it's not a good outcome right now. Adam Aron needs to get AMC stock up higher. The number one thing Adam Aron should be focused on is getting AMC stock higher right now. That's it. Number one thing. If he remotely wants to save AMC, that's what he should be doing. Now it says, how should shareholders deal with AMC stock? A 1,250% dilution in share count over just 3 years creates a challenging situation for AMC shareholders. However, if investors consider AMC's dilution to be part of a well-thought-out strategy likely to create long-term shareholder value, that might make things more palatable. In my perspective, considering AMC's fundamentals, raising cash through an equity offering to sustain the company appears to be the only viable option. Throughout 2023, AMC successfully raised $865 million in cash through equity offerings. That substantial sum could help significantly alleviate the company's high indebtedness. AMC currently has over $9 billion in debts. There's still even some people in this community that question AMC's $9 billion of debts. This is direct loans. This is revolving lines of credit. This is deferred rents. This is liens. This is all of that put together, right? The actual debt that comes due is a little bit over $2 billion in 2026. That's the problem here. It's not $9 billion total, in my opinion. It's the debt that comes due in 2026. You see what happens with like Evergrande, right? Some of these other Chinese property developers that we followed pretty closely in 2021 and 2022, when they miss their payments, well, that's not good, right? They go bankrupt, right? After about 30 days. So that's what we really want to avoid. He says, in my opinion, the key to regaining investor confidence and driving up share price lies in a renewed focus on improving AMC's operational and financial performance. This will require robust revenue growth, profitability, and the implementation of effective cost management. However, this process will take time, and new investors in AMC need to adopt a long-term vision for the company. I believe that AMC made notable progress towards the above-mentioned goals in 2023. The company reported its best year since the pandemic and even broke a record for the highest third-quarter revenues in its history. AMC also managed to keep its liquidity stable and gradually reduce its debt. Looking ahead to 2024, despite facing challenges such as the Hollywood writer's strike causing delays in film production, AMC is poised to return to pre-pandemic revenues, moving towards being traded as a fundamental stock once again, and could be the hallmark of the company's long-term success. So, yes, raising capital is still vital. We still want to see AMC raising capital, but not at $5 per share. Okay, not at $4 or $3 per share. That's no bueno, right? So, AMC is more so trading as a fundamental company. That's why the dilution is hurting them so bad. If if any other company out there, dilute shareholders the way that AMC has, their stocks would go down as well. So that's kind of where we are as of right now. I think that's a pretty solid take on dilution right now. And, if I just want to say it, if you're not prepared to see AMC stock go under $1, potentially get delisted, to lose all of your money, then you probably should take the steps now to minimize that risk. I'm not a financial advisor. I'm not a financial planner. That's not a recommendation to buy, sell, trade, anything. Even if I was a financial advisor, I cannot give personalized financial advice. So you have to look at your own situation and say, hey, do I need this money? Is this retirement money? When did I invest? What are the odds that, I make money here? What are the odds that I lose money from here? You have to look at all of those different things and come to your own conclusions. Now, I will tell you right now, if we do get more liquidity that comes into our markets, if AMC stops diluting shareholders, gives us a commitment to not dilute shareholders, I think AMC stock can rally big time. After all, over the past 12 months, this is pretty interesting. The average price target on AMC over the past 12 months is $9.75 per share, adjusted for today's prices. So that would be, almost a 100% return from here. Even the average analyst estimate from Wall Street currently for the next 12 months has a return potential of about 39%. So it seems like Wall Street is not exactly throwing in the towel as of now. They don't have, crazy high price targets like they once did, but I mean, they're not forecasting the stock's going to fall even more from here. So I think that is, important to consider as well. So yeah, definitely go ahead and keep that one in mind. So there is that. Now, taking a look at the option activity here today as well, you do have volume getting a little bit better today. 52.9% calls, 47.1% put. So that's a little bit better than what we've seen in the last updated video that we did put out earlier today. So go ahead and keep that in mind. Now, if we do look at some of the short interest data, keep in mind, I don't think these numbers are correct, but they could be, right? They could be correct. They might not be correct. You have to come to your own conclusions. Now, short interest percentage of free float, 7.95%, 105.4 million dollars worth of short positions. Days to cover at about 20 million shares currently sold short, 15.22 million shares out on loan. Cost to borrow 1.08%, utilization 29.11%, and a short score of 51.93 out of 100. Now, stocks feeling a little bit of weakness today. I think some of this is still profit taking. That's that narrative of sell first, ask questions later is definitely here in our markets right now, and he is teething. So yeah, he's definitely going through it. Apologize for that, but 10-year treasury yields pretty much flat on the day today. Yield curve not really doing much of anything. The odds of Fed rate cut in March sitting at 59%, down a little bit from yesterday. Odds of 6 rate cuts pretty much staying the same from yesterday as well. Actually down about 2% to 36.3%. Our big move in our markets is really going to come based on the CPI report, which is going to be on Thursday. That's the big catalyst that we are waiting for. That's what could propel AMC stock to higher prices or potentially drop our markets even more. I think CPI is going to come in better than expected, but obviously I don't know that for sure. That's just what I think. So let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. That's going to do it for this video. Thank you for watching, and I will see you in the next one.